Welcome to this week's edition of Trade the Trend, a weekly video about where the stock market is going. This video is going to focus on the S&P 500. I'm also going to have a look at the Russell 2000, as well as bonds, the currency, and the All Ordinary. So make sure you stick around for that. As always, this general commentary doesn't take your personal situation into account. And as you can see, I've got a different backdrop this week. I'm on family trip, school holidays up on the Gold Coast. So just one video this week and maybe a little bit shorter than usual. But anyway, let's get into it. Let's get into that first chart. So here we go. We've got the S&P 500 up on the screen, and really interesting week. So last Friday, the market closed on its lows and looked like it was setting up for a retest of the June low. And but that's not what's happened. Market opened lower on Monday and then turned around and has been rallying for the rest of the week, and that's through until Thursday's close. See what happens on Friday. So it's been a continuation of this upward momentum, which has been in place for quite a while now. And my thoughts last week was that we were heading for more of a consolidation, more of the sideways price action we'd been seeing since mid-June, but that hasn't happened with the new high this week. My view remains the same. I don't think this is an asymmetric entry point to the market. If you've been following these videos for a while now, the play has been for going back into late last year to start cautiously getting a long position, maintaining that long position, looking for the asymmetric entry points when we've had breakouts to add to those positions. And now it's a case of hold and see where this market goes. And this is just such a good example of why. I think we spoke about this a couple of weeks ago. Like I had a viewer leave a message saying, look, if the market's looking toppy, why not just sell and buy back when it pulls back? And my reason for saying, look, I don't think that's the play, is that we can never be sure that the market's going to pull back. Sometimes it just pauses and runs again, and that's what it's done. So holding, staying with the overall dominant trend, I think is a better play than trying to get in and out and trying to be too clever. So jumping over, and what I want to do, I'm just put an RSI. We spoke about the RSI for the last couple of weeks, and this remains my one of the reasons why I don't really want to be adding to positions at this current point, and why I don't think it's asymmetric, is that we've got the market making new highs, but we've got this divergence on the RSI. Now, should the market continue to charge higher, this RSI is going to continue to rise as well, and the divergence will disappear. But nonetheless, it's I think the RSI has been at an elevated level. It started to recede. The market is still, the S&P 500 is still pushing to new highs. I still think we could see a larger pullback sometime over the next few weeks. So as I keep saying, I want to maintain my long position, but I don't want to be adding at this point here at current levels. That said, if I see individual setups in stocks, individual stocks, that may be another matter altogether. But just as an index generally, I don't think this is an asymmetric entry point. Looking at the S&P 500 equal weight, really interesting week. So last week we were talking about how it was generally positive with the equal weight S&P 500 above the moving averages. The moving averages had turned higher. We're in the upper half of the range, and we've continued to see strength through the week. The equal weight ETF for the S&P 500 is now testing the top of this big trading range that has been stuck in since June last year. So 13 months of range-bound action, and now we're up around the top of the range. We want to see this market break through the top of the range, break above this February high, and start to make new highs like the S&P 500 capitalization index has been doing. So far, so good. It's I think the underlying tone of this market remains positive, notwithstanding the potential for some sort of pause in this overall trend in the coming weeks. Looking at the Russell 2000, the small caps, look again, positive price action. This is looking more and more like this could be a large basing structure, a large some sort of a rounding base potentially, but no matter how you look at it, some sort of a basing structure. last week, I said it was quite an important point for the Russell in that the market was testing the moving averages. We had the 50 and the 100-day moving averages. They were rising. They were in an upward stance. The price was testing it. The Russell had pulled back to those moving averages. It also come back to this support, short-term support level around 18,020. And what we've seen is a strong rebound off there. So that's positive. It's more positive price action. So let's continue to watch how this plays out. Now, if you're getting some value from this, please hit that like button. Please leave a short comment. Just, hey, thanks for the video. It just tells YouTube people are watching and engaging. And that's a big thing for YouTube to then know that, look, it's worth passing this video on and showing other people. So please do that. It helps me a lot. Now, let's have a look at the US 10-year bond. This has been fascinating to watch. So this is something, if you've been watching these videos, you know I've been watching it over the last month or so, consolidating just beneath this downward sloping trend line. And we got a breakout from that trend line a couple of weeks ago. So this set the stage potentially for a run higher in yields, which could have put pressure on equities, could have seen that consolidation develop into something larger. What we've seen this week is that this breakout has, well, it's essentially failed. We're now back beneath the downward trend line. I think this takes the immediate heat out of the potential for rates to rise, bond yields to rise. Look, the market's come back to these moving averages. It could still find support, could still find its way higher, but it's the validity of this breakout is very much being brought into question, and is just teetering on the edge of being able to say, look, let's remove this downtrend line. It's not adding value, and maybe yields remain in a range. So potentially good news for equities that are a big run up in yield. Maybe that's not going to happen. And also the US dollar is another interesting one, in that it looked like we had potentially some sort of a basing, at least I was talking about maybe at least over the next few months, some sort of a basing structure, which could have seen the dollar try to push higher, which again could have been a pressure point for equities. But just in the last week, just around the moving averages, which have never turned bullish, they've always remained in this downward cycle. We've seen the dollar fall away. It's broken below the near-term support from these previous lows in February and April, and it's breaking below this more. It's pressuring this more important longer-term support, which goes back quite a way. So let's keep a close eye on this week. If the dollar continues to gather downward momentum, that's going to potentially be really positive for gold and copper, maybe uranium, but particularly gold, particularly those metals we've been watching. So this is worth keeping a close eye on. Does this get followed through selling? Does this momentum start to really feed upon itself? That's going to be a key one to watch over the next few weeks. Now, I'm just going to wrap up. Just a quick word on the ASX 200, because this has had a really important week. Last week, I talked about the potential for this being a false break, and I showed you an example from a previous period. I love it when I see this price action where a market breaks support, stays beneath there for a day, and then quickly rebounds higher. And we've got this V-shaped rebound. I think the ASX 200 is setting itself up for setting itself up positively over for maybe a big breakout above this overhead resistance at 7,600-ish. Not talking about it happening this week or next week, but I think all this price action is underlyingly positive. You can watch the videos on the ASX 200 for the last couple of weeks. 2 weeks ago, I pulled up a weekly chart and talked more about it. But yeah, look, a lot of talk about recession, a crisis and everything when you put on the media, but the price action it's not towing the line of the crisis and everything. It's a market which looks like it's struggling to go down, which means does the path of least resistance switch to the upside? So this is going to be a good one to keep a close eye on. So look, I'm going to leave it there for this week. Thank you for joining me. I've got things to do down on the beach behind me. So thanks for joining in. Back to the 2 video format next week, and I look forward to talking to you then. Till then, bye for now.